Welcome to TSAT program. So, we are discussing about general awareness with special reference to banking and financial awareness. So, today's class is about stock market terminology, that is what is the meaning of stock market, what are the terms and definitions of stock market. Okay. So, what is a stock market? So, every day we come in news. So, stock market is gaining its bull or stock market is crashing. So, in the news channels we follow these kinds of news, bulls market or bear market. Okay, stock market is rising in the sense. So, what is stock market? What does the people do in stock market? Okay, what are the terms used in stock market? So, that is what we are going to learn today. A stock market or equity market is a public entity for the trading of company stocks, which is also known as shares or derivatives at the agreed prices, and these are the shares which is also known as securities listed on the stock exchanges as well as those only traded privately. Okay. So, means a stock market is a public entity where the shares are traded. The shares which are meant for by the company, which belongs to the company or traded in these stock markets. So, once a share, which is nothing but a small denomination of a capital, is traded in a stock market, its price, the capital will be increasing if the company is having good profits and also people's choices. If the company is having any negative things, automatically the share price of a company decreases. All this happens in the stock market. Next, so what are the stock markets or stock exchanges functioning across the world and across India? Coming to in India, so we have 3 national level stock exchanges and 23 overall stock exchanges functioning in India. And coming to world, so most in the developed countries or developing countries, in any kind of country, for the development of companies or industries, they trade their shares in the stock exchanges itself. So, what are the most important stock exchanges functioning in the world also we will come to know today. In India, we have National Stock Exchange in Mumbai, Bombay Stock Exchange in Mumbai, Calcutta Stock Exchange in Kolkata right now, and Cochin Stock Exchange in Kerala, Metropolitan Stock Exchange also in Mumbai. So, these are the top stock exchanges functioning in India itself. Next, coming to the world, we have London Stock Exchange, New York Stock Exchange, and then Shanghai Stock Exchange, then Australia Stock Exchange, Tokyo Stock Exchange, and Hong Kong Stock Exchange. So, these stock exchanges function in the world. Coming to India, we have NSE, that is National Stock Exchange. In short, we call its index as Nifty, NSE Nifty and 50 is the stock exchange. So, it is situated in Mumbai, which is established in 1992 and started operations in 1993. And this we have learned in the last session also. So, today we are learning what is the Nifty status today. So, how the stock markets are trading today, whether it is positive, that is increasing the shares, or negative, that is decreasing the share values. That depends upon the ability of the company. So, as on 30th October, that is as of today 2017 30th October, it is 10,348.60 points. So, total increase is 22.850. So, the stock market, that is NSE Nifty is increasing. So, it is 10,348. These type of statistics will be asked in the examination. So, dear students, already you have done with your prelims, and for the mains point of view, banking awareness, general awareness or financial awareness is must. and the people who read the newspapers every day, okay, coming across the Economic Times, Financial Express or Business Line or Business Standard kind of newspapers. Okay. So, these people will have very good knowledge over these kind of statistics. So, BSE Sensex is now increasing, okay, like NSE, Nifty. Okay. So, BSE is nothing but Bombay Stock Exchange. So, this stock exchange is the oldest stock exchange in Asia, not only in India, it is also oldest stock exchange in Asia and the second largest stock exchange in the world itself. So, as we all know that in the last session I have learnt that it was established in 1875 and its index is known as Sensex. Okay. This Sensex is listed, okay, nearly 5,500 companies. So, total number of companies trading in the Bombay Stock Exchange is 5,500 companies, publicly listed companies. Okay. So, next, and we can see whenever we speak about increasing of the stock market, we see the image of a bull. Okay. So, this BSE Sensex market trends as of today, okay, is 33,225 points. So, it is 100.62 increase. So, it is the bull market we can say. Whenever we feel that, okay, it is a increasing or rising stock market, we call it as bull market. So, Bombay Stock Exchange, okay, Sensex and National Stock Exchange Nifty, okay, both are in bull market right now in India. And the third stock exchange is MCX SX40. So, this MCX SX40 is the youngest stock exchange in India, which is also known as Metropolitan Stock Exchange of India Limited. And I can tell you that its old name, when it was established in the year 2012 and recognized as a stock market in the year 2013, it was known as Multi Commodity Stock Exchange. This may be asked in the interviews. Okay. So, because many of the aspirants, okay, so tell me that they have faced such questions. So, MCSX old name was Multi Commodity Stock Exchange and now it is renamed in 2014 as Metropolitan Stock Exchange of India Limited. So, it was actually founded in the year 2008, which is recognized by SEBI, Securities and Exchange Board of India, as a stock exchange from 21st December 2012 onwards. Its headquarters is also in Mumbai, that is Bandra Kurla complex. It is well known for financial aspirants. And the chairman of MCXSX is Ashima Goyal and its MD and CEO is Uday Kumar. Its indices is known as SX40. SX40 is also known as a free float index. A free float index means the shares are available for trading at 365 days 24/7. Okay. So, nothing but online trading is available for MCXSX. So, friends, so these are the three national level stock exchanges. One is BSE, NSE and MCXSX. Okay. So, it is also this multi commodity stock exchange is also increasing, okay, nothing but it is also under growth stage. Okay. It is also a bull market now, 19,674.78 points were traded recently. Okay. So, as of this date in MCXSX. And coming to the world stock exchanges, that is internationally traded shares, okay, in the international stock exchanges, the number one position is New York Stock Exchange. Okay. This New York Stock Exchange is the oldest stock exchange in the world. Okay. Of course, second oldest stock exchange or largest stock exchange in the world is Bombay Stock Exchange. Okay. So, this New York Stock Exchange is situated in America, that is located at 11 Wall Street, Lower Manhattan, New York, USA. Okay. So, these kind of questions will also be asked. Okay. Example, this Bombay Stock Exchange is situated in Dalal Street. Reserve Bank of India is situated in Mint Road. New York Stock Exchange is situated in Manhattan. So, these are the local streets, okay, where the stock people uses these kinds of terms. Okay. So, it is sometimes referred as big board. Okay. So, New York is also known as a big apple as it is. New York Stock Exchange is also known as a big board. Okay. So, kindly note down these kinds of points, okay, when we refer to you. Next, national stock, that is New York Stock Exchange, it is the world's largest stock exchange, which was established in the year 1817. Okay. So, the date is also mentioned, it was established on 8th of March. So, everyone knows that 8th of March is significant for days, that is important days. On 8th of March every year we are celebrating International Women's Day, not only in India, even in the world. So, 8th of March you can remember for both, one is for establishment of New York Stock Exchange, the other one is for the International Women's Day. So, as of this New York Stock Exchange, okay, as of today, it is traded in the dollars, okay, total 21.3 trillions of US dollars of the market capitalization of companies are listed in New York Stock Exchange. And the chairman of the New York Stock Exchange is 𝗳𝗧𝗦𝗔𝗧, and it is owned by Intercontinental Exchange. This question is also asked in the previous examinations. New York Stock Exchange is owned by, it is owned by Intercontinental Exchange, and the indices which we use the term, okay, to refer to the New York Stock Exchange is Dow Jones. Okay. And the next one is London Stock Exchange. So, we are in England right now. Okay. We are speaking about England Stock Exchange, which is known as London Stock Exchange. Okay. It is located in London itself, London city of England, UK, and it was founded in 1571, 446 years ago, okay, but recognized recently, okay, that is 100 years ago. Okay. The next chairman of this London Stock Exchange is Donald Bredon, and the CEO is 𝗬𝗓𝗪. Okay. It is owned by London Stock Exchange Group, and its indices is known as FTSE 100 index. Okay. So, a question was asked in the interviews. So, what is this 100? Okay, BSE, Sensex 50, NSE Nifty, okay, so sorry, Sensex 30, BSE 50, FTSE 100, MCX SX 40. So, these numericals refers that largest companies trading in the stock markets. Okay. So, if it is Sensex 30, okay, these 30 largest company shares are taken every day. It is being analyzed whether the trade is whether the stocks are increasing or decreasing its prices. Okay. So, FTSE 100 is the index of London Stock Exchange Group, okay, and the FTSE means Financial Times Stock Exchange, which is informally known as 𝗬𝗏𝗔𝗍. So, we can call it as 𝗬𝗏𝗍 for London Stock Exchange, Dow Jones for New York Stock Exchange, and the market capitalization of LSEG is 1.899 trillions. Okay. Next, Shanghai Stock Exchange. Shanghai Stock Exchange operates from China. It is founded on 26th of November 1990. Chairman is Geng Liang. President of Shanghai Stock Exchange is Zhang Yujun. Its total market capitalization is $3.5 trillions, and its indices is SSE index. Okay, Shanghai Stock Exchange 50 index. So, 50 largest companies of China are traded here. Next, Tokyo Stock Exchange. located in the Tokyo city of Japan. So, it is the Japan's stock exchange we can call. Okay. In short, it is called Tosho. Okay. Next, founded in 1949. Actually, it was founded before 1949, that is 1878 itself, but recognized as stock exchange in the world since 1949. Chairman is Taizo Nishimura and indices is Nikkei. Okay. Market capitalization is 3.9 trillions and it is the fourth largest stock exchange in the world. So, Tosho is the fourth largest stock exchange in the world. Now, we know about the terminology which is used in the stock market. First of all, what is a share? So, when people speak about share or stock market, nothing but a part, a small denomination of a capital, a part of a capital. So, it is one of the equal parts into which a company's capital is divided. Nothing but a company's investment is divided among its partners, among its shareholders. It is called a share which is entitled to a holder to a proportion of the profits and losses which are invested by him. So, if anyone is holding a share, he is proportional, his profits are proportional to his investment. So, there are many shareholders, lots of shareholders who invest in a company. Why they invest in a company? Because a company needs to increase its capital. It gives a complete confidence to its investors that if it gains lots of shares from the investors or shareholders, automatically the company can have full of investments for its growth and development. Once it has its own infrastructure developed, it can produce the products or services which can be sold in the stock exchanges itself or in the market to gain the money in the form of revenue. So, to develop a company, to develop its infrastructure, we need to have some investment. These investment cannot be made by a single person. It becomes highly impossible, because in a company we are not speaking about a firm, a partnership firm, a small business. We are speaking about a company which is having more than 50 partners, 50 shareholders. So, sometimes a company will have even more than 1000, 2000 also. So, coming to the investors, once they started investing in the company, with that money, it produces the products or the shares. So, to invest in this company, we find a location which is called a stock market or a stock exchange. So, a share is a small denomination of a capital. What are the types of shares? In India, we have 3 types of shares which are generally issued by a company, which is known as equity shares, preference shares and DVR shares. So, these equity shares, these are the shares that are traded in the stock exchange, which is also known as ordinary shares or the real owners of the company. Bulk of the shares that are traded on the stock exchanges comprises equity shares only, because the owners of this stock exchanges or equity shareholders are entitled to dividends, voting rights and privileges. Here nothing but equity shareholders are the real owners of the company. They are also known as ordinary shareholders. So, they invest in the stock exchanges in the form of ordinary shares or equity shares who has equal rights. So, they have their voting rights, they have their decision making rights, they are entitled to the dividends and also other privileges of the company. And the second one is preference shares. So, in the word preference, we can derive that the preference importance is given to that shareholder. Okay. The preference shareholders or preference shares are issued in India is a preferential or importance point of view. These shares gives preference in dividends and liable to less risk. Okay. So, preference shareholders will be investing for less, they will be investing very less amount of money. Okay. So, more number of preference shareholders will invest in the companies wherever they find less risk. We can call them also sleeping partner, not exactly, okay, but the meaning is little bit same. Okay. They have a fixed dividend which is declared every year and they does not have any kind of voting rights. So, preference shareholders are given the first preference, okay, because whenever a company gets its profits, these profits are first shared among the preference shareholders only. The remaining balance amount are equally distributed among the equity shareholders. Okay. So, it may be less or it may be more even, okay, for the years, but preference shareholders dividend is fixed. So, they want to have very less risk in the companies. And the third type of shares is DVR shares, differential voting rights shares. Normally, these are issued to the equity shareholders, which is issued by few companies in India. Okay. So, it is mostly issued in the developed countries. Okay. So, only few countries or few companies will allow such kind of DVR shares. Okay. So, it also possesses the voting rights as well as higher dividends, nothing but bonus shares are issued for these DVR kind of shares. Who is a shareholder? What a shareholder will do? Okay. So, a shareholder is an owner of a part of shares he owns in a company. There will be many shareholders in the company, okay, but the person who owns more, okay, generally will be the ordinary shareholder or nothing but equity shareholder. Okay. So, anyone can hold the shares in a company if he purchases a part of that share in a company. For example, there is a Colgate company, MRF or any Nestle, etc., like blue chip companies. Take examples of banks, SBI, Axis Bank, ICICI Bank, or else this Infosys, Mahindras, Wipro, etc. If you purchase 1,000 rupees worth of share in these blue chip companies which I said right now, you are owner of that company for the part of shares you have purchased. And what you can do with this share, whenever you feel there is an increase in the price of a share of a particular company you purchased, you can sell this share and make the profit. Whenever you feel that in the future these shares may not have a value and you are finding a decrease in the value of that particular share, then you can sell these company shares. Until you hold the share of a particular company, you will be a shareholder of that company. Okay. So, shareholders are generally classified as individual investors or institutional investors. So, equity shareholders. So, equity shareholders are the real owners of the company. So, who has equal voting rights, and the preference shareholders. So, these are the partly owners of the company who does not have any voting rights. So, what is a share capital? A share capital is a portion of capital of a company that comes from issues of shares. Every company should have a capital in order to finance its activities, nothing but to have investment in its infrastructure, to have a transportation, to have a machinery, to have a human resources, labor and technology, electricity, etc., etc. So, every company should have the capital to run these kind of activities. So, a part of share or a part of share capital is raised every year to maintain these kinds of activities. So, these can be generated by issuing shares or increasing the capital. Okay. So, what is a capital? A capital is nothing but an investment. So, which is also known as authorized capital. Authorized capital is the maximum amount of capital which a company is allowed to raise through its shares, through the stock markets itself. This authorized capital is also known as nominal capital. Okay. So, the maximum amount of the capital it can raise, it rises. Okay. And what is issued capital? So, we are learning the terms here. Okay. So, authorized capital, for example, I will take an example of this glass. So, how much water we can pour in this glass is nothing but authorized capital. So, up to this level. So, which a company can maximum increase its shares. What is issued capital? Issued capital is part of the authorized capital, this part of this glass, for example, water, okay, which is offered to its shareholders, nothing but subscribed people. Okay. So, this glass can hold this much of water, okay, fine, it can raise up to this. So, which is known as authorized capital. Okay. And the issued capital is this much of issued capital which we are offering to the shareholders, okay, who has subscribed themselves as a partners, as a shareholders. Okay. So, this is the difference between authorized capital and issued capital. Okay. Following next, paid up capital. So, it refers to a part of called up capital again, which has been actually paid by the shareholders. So, shareholders may pay back their capital, okay, which is known as paid up capital, and the called up capital is part of subscribed capital which has been issued by the called up by the company for payment. Next, what is the meaning of arbitrage? So, we even listen these kind of words in stock market as well as in the politics, as well as in the markets also, in the vegetable markets also. Okay. So, in simple words, what is the meaning of arbitrage means? The business of taking advantage of difference in prices of a security traded on 2 or more stock exchanges by buying in cheap and selling at profit, okay, and vice versa. So, for example, in the same market, if I buy a dozen of bananas at 40 and sell it at 50, I am making the profit of 10 rupees, which is known as arbitrage. It should be happen in the same market at the same level. So, this arbitrage generally takes place in the stock exchanges. So, who are bears and who are bulls? Okay. So, these kinds of words we come across in the stock markets. So, bears, these are the speculators. Okay. So, bears are the speculators who are pessimist. So, who have negative kind of feeling. Okay. So, they expect the stock prices or any other type of investment to fall. Okay. So, they always expect that the stock prices should fall, should decrease. So, in a bear market, the general sentiment is that prices are going to lower and majority of dealers will sell as quickly as possible for fear of holding shares, which means if, for example, I am having nearly 1 lakh worth of shares of a particular company called ABC. A bear comes to me, a speculator comes to me, nothing but a broker of a stock market comes to me and asks me that, sir, you are having 1 lakh of shares worth of shares of a particular ABC company, and this ABC company is not running its market, okay, nowadays, okay, not running its market good nowadays. Better you sell these stocks or shares which you hold. If you bear these stocks, hold these shares for consecutively for 6 months or 1 year, okay, you may not get the price which is quoted today, you may get losses in the future. Okay. It is 1 lakh worth right now, you may get even 10,000 if you sell after 6 months. Better you sell now today or tomorrow. Okay. So, may get 90,000 or 1 lakh. Okay. So, it is better if you sell now, not after 6 months. In such a way, the speculators will motivate the shareholders. Okay. So, they wants to decrease the price of a particular company. So, this is their work, okay, so that they can buy bulk of the shares from these kind of shareholders. For example, if I sell 1 lakh worth of shares at 90,000 only, 10,000 is loss for me. Okay, I feel that if I sell these prices in after 6 months, okay, I must sell it at 10,000. So, it is 90,000 loss for me. Okay, fine. So, I will be selling 1 lakh worth of shares to a speculator. These kind of bear speculators will start purchasing the shares, okay, by decreasing its prices, and they hold it bulk. After 1 year, okay, these bears will become the bulls, okay, or else not even 1 year, okay, fine, as the time requires, okay, maybe 1 week, 1 day, 1 month, 6 months, 1 year, okay, fine. So, time is not a constraint here. Likewise, these bears will become the bulls and start optimistic kind of marketing. They motivate to the shareholders that, okay, so particular ABC company is having very good market right now. Okay, they have got permission from the government for the establishment of new firms. So, they want to mobilize the shares, they want to mobilize the infrastructure. So, better you people purchase these shares, and they motivate to the people, common man, and they start selling the prices. So, what have sold 1 lakh worth of shares will be sold at 1 lakh 10,000 or 1 lakh 20,000 in the future. Okay. So, this is generally happens in the stock market. Okay. So, these are called as bulls. Okay. So, bulls are the speculators, okay, so who are optimist, having positive sense. They expect share prices or any other type of investment to rise, to increase. Okay. So, a bull is one who expects a rise in the price, so that he can later sell at higher prices. So, therefore, a bull market means a rising market, okay, with abundance of buyers and few sellers. So, we have learned this bulls and bears. So, bulls and bears are the names of animals. Okay. So, why these animal names are given here? So, bear is a pessimist and the bulls are the optimist. Okay, fine. Bulls is known for rising and the bears are known for falling of prices. Okay, fine. So, generally you see whenever the bulls fight, okay, fine, they will be fighting in this way. Okay, fine. So, they will hit the opponent, okay, fine, and it will throw him up. In the sense, the bulls are the speculators. If any stock price is falling, okay, these bulls will start increasing its prices. They will start motivating to the market people, to the common man, to the shareholders, that these companies will get very good benefits, returns in the future. So, this is job done by the bulls. Okay, fine. So, animal which will throw up its opponent high, okay, up. In the same way, the bulls will rise the prices. At the same time, if we speak about a bear is an animal, okay, which lives in the forest, right. So, a bear, a slag bear example you can also call, okay. Slag bear always look down, Okay, fine. It will walk looking down to the earth. Okay, following. So, if any opponent hits, okay, its enemies for example, fine. So, it will hit down him to the earth. In the same way, if any stocks are rising high, okay, automatically the bear market or bear speculators will, okay, fine, calm it down, okay, or else makes fall it to the earth. So, these are the names. This is the why the names of animals are given to the stock markets. Okay. Next, what is a badala transaction? Okay, or carry forward transaction. A badala transaction or carry forward transaction from one settlement period to the next without affecting delivery or payment. So, a carry forward is done at the making up prices, okay, which is usually the closing price of last day of settlement. So, at last day of settlement, the badala transactions will carry on, carry forward transactions or carry on, okay, without affecting the delivery or payment. Okay. For example, you see, I have quoted even an example here, okay, carry forward trading for badala transactions. Okay. So, forward trading is done. Okay. So, for example, I have fixed that a price of a particular product is 10 rupees, okay, for 6 months, come what may, okay, whether the market is up or down. Okay. For 6 months, I will be purchasing that product at 10 rupees only, okay, even if it is 100 rupees or even if it is 50 or even if it is 2 rupees or 5 rupees. I will be purchasing the product at 10 rupees only, which is nothing but forward contract or forward trading. Okay. So, this happens in the stock market, which is known as carry forward trading or also known as badala transactions. Okay. So, for example, you see B buys 100 shares of BPL company from S at a price of rupees 50 per share, and the shares to be delivered on 20th August. But on 20th August, this 50 rupees per share was increased to 60, that is 10 rupees was increased. This is a loss for the S and the profit for the BPL, sorry B of a BPL company. If it is sold at 40, okay, it is a loss for B and the profit for S. Okay. So, such kind of things happens in badala transactions. Okay. Next, blue chip companies. What are blue chip companies? So, generally we speak that whenever a company is in profit, it is called a blue chip company. So, blue chip companies are the shares of large, well established and financially sound companies with impressive records of earnings and dividends since last 3 years or 5 years. So, consecutively if a company is increasing its shares, its investment, its dividends is also increases. Okay. So, total number of sold stock, net worth is also seen, the total investment is also seen since last years, and the total number of shareholders is also observed. It is the meaning of a blue chip companies. So, never these companies will get into deep losses. Okay. So, people will also show interest to invest in these blue chips only. Okay. So, the branded companies are the blue chip companies we can call. Okay. So, generally the blue chip shares provide low to moderate current yield and moderate to high capital gains yield. So, slowly and gradually we can start purchasing the shares of these blue chip companies. So, maybe Infosys we can call Mahindra, okay, you can call Tatas, Wipros, you can call Colgate, MRF, okay, Axis Bank or else State Bank of India, ICICI Bank, Vijaya Bank. Okay. So, any kind of banking companies, okay, or IT companies or manufacturing companies or any kind of companies which is having profits continuously, increasing its net worth, investments continuously is known as a blue chip company. So, I have quoted some examples here: Coca-Cola, Exxon, Nestle, and then P&G, Shell, Reliance, Infosys, etc. So, these are the blue chip companies. So, apart from share, we also learned about dividend here. What is dividend? A dividend is income you receive as a shareholder from a company. Okay. So, each and every partner will receive his share, his profits. The profit in a company is known as dividend. So, it is paid to the shareholder. Okay. So, it is cut of profits earned by the business for a year. Will vary from company to company, of course, and also year to year. Okay. So, therefore, a dividend is an income which is paid to the shareholder in the form of profits. A dividend may be two, okay, nothing but in the form of cash or in the form of shares again. Okay. A person may receive the dividends, nothing but profits, in the form of cash or in the form of shares. Okay. That is nothing but he wants to wants to invest in that company itself. The shares he gets, he wants to invest in a company, which is called share dividend, or if it is in the form of cash, it is known as cash dividend. Okay. Then what is a commission? A commission is a fee charged by a broker or distributor for his or her service in facilitating a transaction. So, a commission is based on a transaction. It is received. So, it is received, okay, as a fee charged by him, okay, for making a transaction is called a commission. And dividends, which can also be derived from the mutual funds. So, mutual fund dividends are usually like 10 rupees per unit, okay, or 100 rupees per unit, which are paid on the face value of the units. Okay. So, unlike a dividend from an equity share, mutual fund dividends are not necessarily paid out of the profits of a scheme. As such, after the payment of the dividend, the net asset value of the scheme falls to extent of the payout. Nothing but, okay. So, dividends you receive from the company as a profit, and the mutual fund dividends, okay, also which is received in the form of profit, okay, but not as a share value. Okay. You receive it as a net asset value of a particular scheme. Okay. Every company will offer the mutual fund schemes, okay, which have less market risk. What is a mutual fund? Okay, fine. We will learn in the coming sessions. Okay. So, what is a bonus then? Okay, we have learned a dividend, we have learned a bonus, sorry, we have learned a commission, a profit. Okay. Now, bonus, a free allotment of shares made in proportion to existing shares out of accumulated reserves. So, a bonus share does not constitute additional wealth to the shareholders. So, it itself carries a wealth. Okay. For example, if I buy a 100 rupee share in Infosys, because Infosys offers more number of shares, I am just quoting the example of Infosys here. Okay. So, more number of bonus are offered by Infosys. If I purchased 100 or 1000 rupees, you say example, 1000 rupees worth of shares I purchased from Infosys, I have done nothing, I have put it in my bank account, okay, fine, in my demat account safely for 6 months. After 6 months, when I found, okay, I want to sell the shares, when I found that, okay, so I have worth of 1500 shares. Apart from this, you can also add upon your own quotation there. Okay, you can sell it at 1600 or 1700. 1000 rupees you purchased, 500 rupees given by the company as a bonus, and the 100 or 200 rupees you are quoting extra, okay, fine, to gain some profits. You are becoming a bull there, you are becoming a speculator there, okay, fine. So, convincing the other people, okay, other shareholders in the market that if I am getting the bonus from the company, you will be getting that. Okay, you are just transforming the shares to that concerned person. Okay. So, therefore, for recapitalization of shares, these kinds of bonus are offered, which impacts more on the investment. Okay. So, in the market sentiment also, the share prices go up with offering the bonus shares. Then what is a base price? Okay. So, basic price or base price. So, it is a price which is quoted at the beginning of the trading. Okay. So, whenever we are initiating the trading on the trading day, at the beginning the price we quote is known as base price. It is used to determine the day minimum or the maximum and the operation ranges of the trading day. Okay. So, the base price will decide the real face value of the share here. Okay. So, buyers and sellers. Okay. So, in the stock market, buyers and sellers are very important. Okay. It is completely run on the sentiment of the company, confidence of a market. Okay. So, here the buyer means a trading member who has placed the order for the purchase of securities. So, he places the order, buyer places the order, okay. He wants to purchase the securities, and a seller, he is a trading member who has placed the order for selling the securities, nothing. Okay, fine. It is just simple. Okay, so the commission merchants, the brokers, etc., these people involved in buying and selling of securities, who is known as buyer and seller. So, what is a bid and what is an offer and what is an brokerage? Bid is the price at which the market maker buys from the investor, and offer is a price at which he offers to sell the stock to the investor. So, always the offer is higher than the bid. Just now I have set an example that I am having 1000 worth of shares and the company has offered me 500 rupees bonus. So, it is total 1500 worth of shares I am having. Okay. So, I am offering this at 1600. So, bidding is at 1500. I am offering it 1600 because I am giving you the confidence that it may go up to even 1700 or 1800 in the future, that is next day or the next week. So, there is no loss in buying this kind of shares. So, such kind of confidence or offers will be always higher than the bid. Okay. So, what is a brokerage? Normally the merchants will do such kind of market activities. So, brokerage is a commission charged by the broker. The maximum brokerage chargeable is always determined by the SEBI. So, SEBI is Securities and Exchange Board of India, the regulator of stock market. Okay. So, it will put an eye on the stock brokers or stock market as a whole. So, how this is functioning? If there is any high brokerage quoted, okay, or any insider trading, illegal trading is quoted, okay, or the brokers are suppressing the interest of the investors, okay, these will be purviewed by the regulators SEBI. Okay. So, brokers are very important here, okay, fine, who will buy the sell shares and sell the shares, okay, following to the shareholders or to the common people also. And what is basket trading? So, basket trading is a facility by which investors are in a position to buy or sell all Sensex shares in a proportion of current weights in the Sensex. So, they want to buy all the 30 shares in the Sensex in one go, is known as basket trading. So, this is generally happens in the BSE, where international traders, international shareholders, okay, will visit Indian stock markets. Okay. So, they will observe whether the Indian stock market is in positive or negative. Okay. So, if it is positive, so they will look over everything, India's GDP, whether it is high, even as the inflation, whether it is low, as well as PPP, purchasing power parity, okay, etc., will be observed. Okay. So that if the people is having very good purchasing power parity, low inflation is traded, okay, as well as GDP is very high, the people will have enough money in the market to purchase the products. Okay. At the same time, the international traders will come for international, that is basket trading. So, they will buy all the shares at once and they will start increasing the capital of a company as well as the raising the stock markets. Okay. So, what is beta? Beta is a standard measure of risk of an individual stock. If anyone wants to buy a stock market, that is a share in a stock market, he will look for the entire gestation of the shares, how many years he can hold this share, okay. So, how much bonus it can give him, in case of losses, how much risk he can experience. So, these are automatically quoted by the buyers and sellers. Okay. So, a standard measure is mentioned here. Okay. So, this measure will operate for the risk of the company. Clearing days or settlement days. So, these are the dates fixed in advance by the stock exchange for the first and last business days of each clearance. So, the intervening period is called settlement period. So, the clearing days, okay, are also fixed by the sellers and buyers of the stock market. And now, here it is clearing house. Clearing house is mentioned in the stock market as well as in the banking also. Reserve Bank of India will maintain the clearing houses to clear the checks, DDs, etc., etc. This will be explained in the coming sessions. As of today, we are speaking about stock market, that is clearing house is maintained by the stock exchange. Okay. So, it is act as a central agency for effecting delivery and settlement of contracts. Okay. Nothing but if a person buys a stock, a share, he will be buying through the demat account, through BSE or NSE, through the brokers. Automatically, if he buys any share, a part of amount is deducted from his bank account, okay, and it will be settled to the seller. So, all these three things, buying, selling and settlement, okay, will be cleared through the clearing houses. So, these are generally known as pay in or pay out days respectively, okay, and the closing price, nothing but ending price, okay, the trade price of a security at the end of trading day. So, based on the closing price of the security, we can also mention the base price, nothing but today's closing price is tomorrow's base price, okay, nothing but, okay, once the closing price is being fixed, it is a beginning price for the next trading day, okay, when the stock market starts. And what is again carry forward trading? Okay, trading where the settlement of trade is postponed on the stock exchange until the future settlement period involving payment of interest of the account is made. Okay, so, postponement of trading. So, all this we are learning, okay, as part of stock market terminology.